Even the slightest suggestion of the Fed cutting rates sent the markets into overdrive on Friday. This morning, we're learning a bit more about what it means for the housing market here at home. 90's real estate expert Lane Lyon joins us once again. Lane is a realtor and managing broker at Coldwell Banker. Thanks for coming in.
Hey, good morning. Thanks for having me on.
Okay, so this is interesting. Talk about the reactions to the Fed chair's comments.
Well, there has been so much buzz since Friday and what these comments really mean. And even though he didn't totally commit himself and say for sure that there will be a cut next month when it comes to interest rates, Wall Street loved the idea of lower interest rates. As you've been reporting, we saw the Dow shoot up 600 points. We were watching. Also, we saw mortgage rates come down a little bit. That's more tied to the Treasury yields, which fell. So we saw mortgage rates go to 6.55% on Friday. That's the first time we've seen that number in about a year.
Ooh, I need to call my loan manager over there.
Might be getting close.
Yes. Okay, so here's where you like to play a little bit of the myth buster game here. Starting with the fact that the Fed doesn't directly control the mortgage rate.
Right, I know, and I think that this is probably the question I get asked the most. So let's make the Fed fun today if we can. So that myth that the Fed automatically sets your mortgage rate, keep in mind that the Fed really is talking about the federal funds rate. That's what banks charge each other for things like credit cards, auto loans, business loans that are really affected. Mortgage rates follow the bond market. So let's go to the next myth here, Corey. And that is that if the Fed cuts the rate, that automatically mortgage rates are going to go down. I'm sorry to say that's not always the case. Mortgage rates tend to really move with inflation, with jobs reports. Sometimes they are independent of each other a little bit, but certainly they like to follow each other, but it's not an automatic thing. All right, I got a couple more, Corey. First of all, there are people out there that say, you know, it's not 3% anymore. It's not going to make that big of a difference, even these little cuts. Well, actually, the National Association of Realtors says that at 6%, that's kind of a magic number right now, we could see 5.5 million households across the country be able to afford the median sales price for a house. So that's good news. Yeah. 500,000 renters coming off the fence and buying. So that could really energize the housing market.
It's so funny when I bring up high interest rates. I have friends that are like, you don't even know. Like the first time they took out a loan, it was 16%.
Oh yeah, right. Remember the 80s? Some of us do, and our parents are always reminding us of that. Hey, let's do one more here. One myth here that we're hearing a lot. And this is kind of that political question that if the Fed chair is somehow replaced, that we will see the rates come down, maybe into those really low levels. We won't wade into the debate here, but there's a lot of experts that say, really, the Fed is more than just one person. And in fact, investors, if they start to feel that politics is influencing things, we could actually see rates go up. So that's not necessarily the case. I'm sure there's a talk show going on right now about that. But the main thing to remember is that we've got some energy happening, and right now, we'll go with it.
Okay. And real quick, you say that buyers don't really need to wait until that September Fed meeting.
I say don't wait, because a lot of these mortgage rates are happening now. Buyers are taking advantage of now. Corey was out this weekend with 3 sets of buyers looking at houses around the Denver area. 2 of them came out and said, I want to get on this early because I have a feeling that if rates come down, prices could go back up. And I want to take advantage of the summer prices that we're seeing in Denver right now. Not a bad idea. They can always refinance if they come down.
Exactly. And then you get into the bidding wars and all of that stuff again.
We could be seeing a little bit more action. Demand goes up when the rates come down. How much they come down, you know, we're not exactly sure. But even if they hold at this level, there's a lot of opportunity.
You know, real quick, hopefully I don't throw you off with this, but I was driving out by Sterling Ranch and I said, you know, it said mortgage rates as low as 4.55%. Right. New builds, you can get even lower mortgage rates, right?
Incredible incentives with new construction right now, even 3.9%. So really something to check out if you're in the market.
I was shocked by that number.
Yeah,
how about
that? Sounds kind of nice.
Sounds really nice. Let me tell you, Lane, as always, thanks for coming in.
You bet. Have a good week.